Chancellor Reeves's first budget was a hugely consequential budget. Not just because it was her first budget, the first budget delivered by a female Chancellor, or the first Labour budget in 14 years, or even the long build-up to it. It was consequential in its own right because of the measures and direction of travel both economically and fiscally taken and the direction this means the country is now moving in. This was the biggest tax-raising budget since 1993. From this budget, it is clear that the government is prioritising higher public spending and investment and increases in taxation to help pay for this, alongside changes in their fiscal rules to allow for more capital investment spending. The Chancellor appears to have taken a view that the UK is more in line with our European counterparts than looking across the Atlantic in terms of public spending size of the state and taxation needed to maintain it. The budget has also acted as a reset for the government and clearly stamped out its economic and fiscal agenda going forwards. The Chancellor will now hope that this agenda delivers on the government's central mission to deliver economic growth. There was a lot of talking points from what was a rather long budget, both in terms of the Chancellor's speech and also budget document. The three key areas from the budget I will now touch upon in more detail that is important to to businesses and our members are taxation, investment, stability and certainty. On taxation, apart from the headline-grabbing amount of tax increases raised in the budget, there is a number of new tax changes and increases that were made by the Chancellor members and businesses should be aware of. The majority of the 40 billion of increased taxation was delivered in the budget comes from increasing employers' national insurance and the thresholds at which paying employers' national insurance comes in. Employers' national insurance contributions will increase by 1.2 percentage points to 15%. The per-employee threshold at which employers start to pay national insurance will be reduced from £9,100 per year to £5,000 per year. These changes will apply from the 6th of April 2025. To support SMEs with this change, the Chancellor announced the government is increasing the employment allowance from £5,000 to £10,500 and removing the £100,000 threshold, expanding this to all eligible employers. There was also announcements to deliver a new business rate system through permanently lower business rate multipliers for retail, hospitality and leisure properties from 2026 to 27. In the meantime, Chancellor Reeves announced that she would provide 1.9 billion small businesses on the high street in 25-26 by freezing the small business multiplier and providing 40% relief on bills for retail, hospitality and leisure properties, up to £110,000 cash cap. The budget also confirmed that corporation tax will remain at 25% for the course of this Parliament. The Chancellor announced changes to the capital gains tax, with increases to the lower rate of capital gains tax from 10% to 18% and the higher rate from 20% to 24%. Capital gains tax rates for business asset, disposal relief and investors relief will rise gradually to 14% from the 6th of April 2025 and match the main lower rate of 18% from the 6th of April 2026. The Chancellor also confirmed the delivery of a corporate tax roadmap, which is designed to provide certainty to businesses over a range of corporate taxes and reliefs. There was a number of other tax changes announced around different duties, stamp duty, reliefs, and on inheritance tax. Our budget briefing lists these and provides more details on these changes. On investment, this was a big focus in this budget, both in terms of private and public investment. The Chancellor in her speech focused upon the government's recent investment summit and how that was helping to deliver new private investment into the UK economy. However, the big announcement in the budget around investment came on the changes to the fiscal rules. The Chancellor's second fiscal rule she announced was around investment. The investment rule will ensure that the net financial debt is falling as a proportion of GDP. This rule is designed to keep debt on a sustainable path while allowing the step change needed in investment, by capturing not just the debt that government owes, but also financial assets that are expected to generate future returns. The Chancellor stated, due to the fiscal changes, in particular the one on investment, she's been able to increase public investment by more than 100 billion over the next 5 years, with capital increasing by 13 billion next year, taking total departmental capital spending to 131 billion in 25-26. The hope is that this increased public sector investment would deliver better and more effective public services and help to crowd in more private sector investment to help grow the economy. The OBR assumes that in the long run, higher public investment has a positive impact on business investment of around 30 pence for every £1 increase in public investment spending. Another big focus of the budget was the focus on providing stability and certainty for businesses. This could be seen throughout all aspects of the budget. The budget announced a corporate tax roadmap, which contained confirmed corporation tax rates, as well as confirmation on other key business reliefs, including that on R&D funding and that the capital allowances regime would remain. A number of the tax increases will not happen immediately and will take place at different points next year or in future years, and the Chancellor stated this was to help provide time for businesses to prepare. The budget has a big focus on the medium to long term, with lots of things planned over 5 to 10 year cycles. Some of these include the 5-year capital budget cycles, the 10-year infrastructure strategy, 10-year R&D settlements, and a 10-year health plan, just to give a few examples. The Chancellor hopes that by providing this certainty over long periods, it will help businesses to be able to make more confident and long-term decisions and investments that will help grow the economy. The budget contained a number of policy wins for our members, and points we made in our pre-budget submission we can see have been taken on board. I will not list all the wins here and now as they will appear on the screen, but I wanted to highlight the 3 key ones. They are measures around certainty, lots of announcements to help provide certainty, including corporate tax roadmap, 10-year cycles for R&D, and a number of tax changes not introduced overnight to allow businesses time to prepare. And also there was a focus on medium and longer term, such as 10-year infrastructure strategy to come. Others include confirmation of R&D budget, the capital expensing regime to be maintained, but we will continue to push for second-hand equipment to be within that. We have long made points around the need to give businesses certainty and welcome many of the announcements in this budget that help provide that. The next policy win was the changes to the fiscal rules that will allow for more capital expending. We called for these changes in our most recent report, delivering the 5 missions, business insights for a purposeful and integrated government. We welcome some of these ideas have been taken on board, but will continue to make points around the need for good governance on this that the report raises. Finally, the third policy win I wanted to focus on was measures to support productivity, including the 2% departmental productivity targets and the announcement that the personal income tax and national insurance thresholds freeze will end in 2028. These are points we have made in our productivity research in separate reports and welcome the action being taken on both. It is good to see that improving public sector productivity remains a focus, and stopping the freeze on personal taxation thresholds in 2028, the government recognises the harm that fiscal drag can cause to the economy and productivity. We will continue to push for improving productivity to be an ongoing focus of the government across both the private and public sectors, and for further measures to support this. We will continue to engage with His Majesty's Treasury and wider government to push across members' points and views and ensure awareness of how business can be supported going forwards.